Hi, this is Jason Arp. I'm the City Councilman for the 4th District of Fort Wayne, and today we're going to talk about tax abatement. This is a topic that I brought up in a previous video when we were talking about business personal property tax and potentially changing our ordinances that would allow all new businesses to bring business equipment in tax-free without having to pay taxes on that. And part of that discussion was that we already have a lot of things that kind of work in that way. They're called tax abatements, in which if someone builds a new facility or brings in new equipment, they can apply for a tax abatement to reduce their tax liability. There's a few different ways that those things can work. I'm going to describe for you on the board kind of a straightforward real property abatement for it's what they call a phase-in. So let's just say for a moment that we have a property that's going to be, once it's done, it'll be, we'll just say $100,000 of assessed value. So this is what the assessor would use as the number to apply taxes to it. And let's just say that this is going to be some sort of 2% property. So it can be like an apartment building or something like that. It'll be taxed at 2%. So normally the taxes on a $100,000 property at 2% obviously is going to be $2,000 a year. If they get a tax abatement and it's a standard phase-in, the way that works is you have the first year you would tax 0% of the assessed value. So you're applying taxes to this at that rate. So that's, no taxes in the first year. The second year, depending on what schedule, they can either do a 10-year or a 7-year phase-in. I guess for this, we'll just say we're doing a 10-year phase-in. So in year 2, you do 10% of the value. We're going to be taxing, $10,000 in this particular example at 2%. So we're just looking at, that's going to be, $200 of taxes that first year versus what would have been the normal tax, which would have been $2,000. And in year 3, we'll say 20%, and it's $20,000, and we have $400 of taxes being collected. And we go on like that until we reach the 10th year. Actually, it'd be in the 11th year. It would be taxed at the full 100% rate. And so through the lifetime of this thing, they've basically paid half of the taxes that they would have paid had they not gotten the abatement. It's pretty straightforward for real property. When you get into personal property, the changes in the assessed value, you have a couple of different things going on. One of those is that the property itself is usually being depreciated because it's business equipment. It's not going to last forever. And so they'll want to see that depreciation rate is matching the depreciation rate that someone is putting on their federal taxes. And then not all of that is taxed. It's like 40% of whatever the depreciated rate is. But you have to keep track of all this stuff and make sure that they tie to what you're reporting for the IRS. And it's a lot more cumbersome to do the reporting and keeping track of the assessed value of the business personal property than it is with the real property. And then finally, there's something called super abatement, in which you define a period of time, and the cases that I've seen has been 10 years, in which no taxes will be collected on that property. There's only been 2 super abatements issued in Allen County that I know of since the state has given counties that option. One was when General Motors announced that they were going to do over $1 billion worth of investment in business personal property, so equipment. They got a super abatement on that, so they're not going to pay taxes on that equipment. And then the other was on Cityscape Flats, which is an apartment complex beside the baseball diamond downtown. So those are the two super abatement examples that I have. So if you want to see more videos like this where we describe how the city government works and the taxation and what we do on city council, be sure to subscribe. And if you have any questions for me, you can either comment here or you can contact me through friends of Jason Arp at gmail.com, an email, or go to jasonarp.com and you can comment there, and there's actually additional information there. All right, thanks for watching.